Hey my friend, today's video is probably going to be the most important one I've done on this channel, because to be a successful investor you need to understand how the game is played and the mentality behind the stock market. If you don't, you will be a losing investor, and this is not what I want for you. So if there is only one thing that you need to remember from all of the video, is that the stock market is the only place where when everything is on sale, no one wants to buy, and when everything is expensive, everyone is rushing at the door to buy. You need to be smarter than this in order to be a successful investor. So anyway, in today's video, we're going to talk about how people view the stock market. Then we will get to how we should view the stock market and how we should use it to grow wealth over time. Then we will talk about the current levels of the markets in 2021 and what's my take on this, before finally giving you my advice on what I'm personally doing with my money and what I think you guys should do with your money. Just so we're clear, as always, I'm only here to show you the game, show you what are the cards, how you play them, and when you play them is up to you to decide, meaning that you take on the risk, and I'm not a financial advisor. Anyway, let's get into the video. Okay, so let's first get into the reality of the stock market. A lot of people see it as going to the casino or playing lotto. It is not the same thing. A lot of people want to do speculative things where they will multiply their money by 3 or 4 times in a year. Guys, yes, there are a few people that do it, but it's actually not the way the stock market should be approached. And of course, you're gonna remember the one that I've succeeded in doing so and I've had incredible return in a year, 2 years, or even 5-year time horizon. But the reality is there is a survivorship bias. So we only remember the ones that succeed. We do not remember the ones that fail or have lost all of their money along the way. If you want to do something speculative, multiply your money by X in X amount of time, this is not the channel for you. I'm only here to show you how you can park your money into investing that is growing your money over the long term. The reality is, on YouTube, if you find people that tell you, yeah, I'm making X in X amount of time, they're making probably more money by the views they're doing on YouTube. That is an active business rather than their real trading capacities. The only thing I'm trying to say here is, if you think about investing, please just buy and hold and don't do something extremely speculative with all of your money. If you really want to do so, take maybe 5 or 10% of your money, but leave the rest in something safe and secure. I'm saying so because I know what it is to want to make money fast, but believe me, this is where you make a lot of mistakes. The most successful investor of all time always say the same. Time in the market beats timing the market. Being invested for the long term is what makes the most sense, and this is where the real return will add up over time. Alright, so all of that said, let's move to the stock market mentality and what you need to know before you start investing. If there is something to take away from all of what I'm going to explain, is that stock markets are cyclical. That is, they have always period of expansions, which are called bull markets, followed by a period of recessions or even depression, which are called bear market. Both are inevitable and will happen again and again and again, meaning that during your lifetime of investing, you will go through bear markets, which are stock market crashes or depression. So to dive a bit deeper into this, we will take the example of the S&P 500, which is an index proxy of the American economy, which has the 500 largest US companies into it. So let's start this off big and start with the Great Depression, which started in 1929 and finished at the end of World War II. So it took the S&P 500 35 years to get back to a new high from the highs of 1929 to 1954. That is, you would have waited 25 years to get return of your initial investment if you invested at the top in 1929. Then we can look at another recession in the 1970s, where the S&P 500 hit new highs in 1972, and then it took 8 years to get to another new high again in 1980. We keep moving forward and get to the dot-com bubble in the 2000s, where technology stocks were absolutely soaring and stock valuations went absolutely bananas. That is, you'd had those Apple, Microsoft that started to trade at crazy multiples on a financial basis where the technology did not support their valuations. Everything went crashing down, and in 2 years, a stock like Amazon lost more than 90% of its value. After the dot-com bubble, we had the subprime crisis, the great financial crisis, which followed in 2008 and lasted until 2012. Because of those two crises, it took 13 years for the S&P 500 to hit new highs. So if you invested some money at the exact top, it would have taken 13 years so that money starts to yield results. And then recent history, last year during the financial crisis, we had the fastest drop in the stock market ever. Fastest crash in history, but then followed the fastest recovery ever in the history of stock markets. What we can do now is have a look at the bigger picture and look how small those crises look. It looks like nothing happened. And this is why time in the market beats timing the market. Where is the real money made here when you invest? Well, it's made during those recessions and bear markets. No matter how long they last, history has shown times and times again that the index hit new high, no matter how long it takes. So you will make most of your money when you invest during those recessions period and those financial crises. So as a youngster, if you have time in front of you, you should really welcome a financial crisis because this is where you will make most of your money into the stock market. The lesson here is that the stock market is a tool to transfer money from the impatient to the patient. The real problem here is that it's really hard to invest money when everything is crashing down because you have one or two negative articles telling you that the world is ended, that stock market will never come back to normal, and that everything is different this time. Reality is, a savvy investor, an intelligent investor knows and recognizes where is the opportunity and where is the risk. And there are way less risk to invest when you are in a downturn period that is a bear market or a recession. What are the lessons that we take from history? The first one is that stock market crashes and bear markets are inevitable and unpredictable. You will never be able to tell when one is going to come, but you know it will. So you need to be ready to take advantage of the opportunities. That is, you need cash on the side, especially when the markets are at new record highs for corrections or recessions to take advantage of lower stock prices. The second lesson is that the real money is made by the intelligent investor that invests during bear market and recessions. This is where most of the gains will come from, but you need to have the discipline to invest when everyone is telling you that the world is ending. Basically, when no one wants to get in, you will want to invest because you recognize that everything is cheap. And when everyone is running towards some things that are expensive, you will want to take a step back and put cash on the sideline. Now, if you understand this story, you know that waking up one day and seeing all of your portfolio value absolutely going down and all of your stocks going red is part of the process. You understand that everything is not always going to be green and that there will be time where your portfolio value would have taken a hit because of an economical crisis or a health crisis. This is part of the process and you need to understand that. If you think you can't take it, there is nothing I can do for you and you should not be invested into the stock market. But know that because of inflation, your purchasing power will keep decreasing over time. That is, you will be able to buy less and less goods with your money as time goes on. All in all, crashes are bad news short term, but are amazing for the long-term investor. He's able to buy way more stock at cheaper prices and is exactly where he's going to make most of his money. Understand and respect those key lessons and you will be a really successful investor. Alright, so now that the past is done, let's talk about today what everyone wants to know. What is the state of the 2021 stock market? First, let's talk about the bad news. The first thing is that all of the major indices around the world are all at all-time high. That is, the stock prices are really high right now and you're investing at basically the top that has ever been reached. There are a few factors that explain that though. It's because the central banks, which are like the mother of all banks, have printed 1/3 of the money in circulation today in the last year and at the beginning of 2021. The Fed alone, the Federal Reserve in the US, has printed 1/5 of all of the US dollar in activity in 2020 and 2021. It's absolutely insane. What happens when there is too much money in circulation? Well, some people have a lot of money in saving, they invest it, asset prices go up, which is why real estate, stock prices, commodities, Bitcoin, everything is going up right now and everything is expensive. Your second bad news is that this lists some stock prices today to be high only because they are maintained artificially by central banks. That is, if central banks were not printing that much money, some businesses would struggle way more and the stock prices would not be as high as what they are today. Now, that was for the bad news. Let's talk about the good stuff. First one is that vaccines are coming out in most countries and that developed countries are vaccinating their population. We are expecting the biggest boom in business and economical activity that the humankind has ever lived, just because there is so much money in activity and everyone is looking forward to go back to a normal life again. This phenomenon will highly benefit all of the businesses around the world, which are going to make much more profits, driving their share price up and hence making stock prices and stock indices higher along the way. The second positive catalyst for the markets in 2021 is that the central banks around the world have pledged to help struggling businesses at least until 2024. So they will keep printing money or helping those businesses as much as they can until they see them going back to normal again. To finish up, fear, which drives market prices short term, is at its all-time lows. People are confident about a reopening. They understand now what is coronavirus. And the top fear that we experienced at the beginning of 2020 is completely over. So overall, yes, you're investing at all-time high and this is not the best entry price you could ever get. But honestly, you can't time the market and it's not your job as an investor. As Isaac Newton said, he can't understand the madness of people in the stock market, although he invented the theory of gravity and the law of objects in motion. Guys, if Isaac Newton can't tell if the market is going to go up or down, believe me, I can't either, and you probably can't too. So with all that said, well, what should you do with your money? And what am I doing? I believe that yes, you should be invested, although it's all-time highs and it's not the best entry point you could have ever gotten. We are in a bull market right now. The economy is booming and stock markets might have further to go. But you need to be aware, yes, this is really high, so you should keep cash on the sideline in case there is a crash to find better entry prices and opportunities. If I take myself as an example, I've been pouring all the money I could in the last 12 months and I've just started to take my foot off the accelerator. I'm already highly invested into the market, so if they go up, I'm really happy I'm making more money, and if they go down, it's even better. I've got cash on the sidelines and I can take advantage of those opportunities and go shopping again. And this is the mentality. Whatever happens, markets going higher or markets going lower, I'm a winner in any case because I'm patient and I know I have a long-term investment horizon. If this is too much for you and you have no idea when you should invest and when you shouldn't, well, just know that you can just invest the same amount every month or every 3 months. By doing so, you will take advantage of recessions and bear markets throughout time. And yes, you will invest some of your money at highs as well, but you can't time the market and a new high will always be followed by another new high. So you don't really care that much if you have the time to wait. Last piece of advice, if you see a big market crash, maybe leave a bit more frugally and take all that money to invest into the stock market and then wait it out a few years. When this is done, well, with the profits, you can send me a little box of chocolate. I will highly appreciate it. Anyway, guys, this wraps it up. I really hope you enjoyed the video and please make sure you understand the psychology of the stock market and the period that you will have to go through as an investor. I don't want you to be a losing one. I'd love for you to be really successful with your investments. Please don't be a... Tschüss!